All right, guys, welcome to a very special class today. We have a guest speaker, not in the traditional format that we obviously would, but we have Mr. Spadaro with us here today, who's going to talk a little bit about the stock market. He definitely has a background and has studied this before, and I'll let him speak for himself on that regard, and we'll go through some basic questions. As you guys are listening to this today, I want you to make sure that you're paying attention, maybe jotting some things down, because the assignment that will be attached to this will have questions all pertaining to what he has to say, not so much just a Google search that you guys can do. So the answers will be particular to what he has to tell you today. So like I said, his name is Mr. Spadaro, and I'll kind of let him introduce himself in terms of maybe, Mr. Spadaro, if you could tell us kind of what you do now for a living and what your background is in terms of education, that'd be fantastic.
Sure. Yeah, and thanks again for having me, Mr. Nedgetley. I appreciate that. So I started, I have a bachelor's in finance, focused towards, investing, stock markets, financial planning. And then when I graduated, I joined Fifth Third Bank. I was in their banking division and helped individuals with financial planning needs. I have a Series 663 life, health, and annuities license, which allows me to perform certain transactions for individuals. And then I left the bank and got into the healthcare industry, and that's where I went on to get an MBA in healthcare management. And right now I work for a local healthcare provider as the chief financial officer. So that's just my, quick 20-second spiel.
No, perfect. So nice. Real quick before we get into the stock market, I know I have students, some of them that'll be listening that are interested, someone maybe in the finance field, and they just like the idea of working with money. Some of them have brought that up to me. What are some of the things, would you say, like going through maybe schooling, if you could give them some advice, if this is something that they want to go into, what might you tell them?
So yeah, what drove me was just, I love watching the stock market. I love, dealing with money, working with money, planning for the future. I'm always a future thinker. So I just want to, if you have any thoughts of, enjoying finances, personal finances, business finances, looking at, profit and loss statements, balance sheets with different companies. That's definitely the route you should go. It's towards more of a finance degree.
So, yeah, it's always interesting. I'll get on to these questions, but I always lead them off when in our normal classes, obviously what we're not having now, but I always lead them off with starting the stock market or any type of saving and investing. I said, just imagine all of you are going to get a paycheck. Now, what if I tell you can take that paycheck and make more money on top of what you're getting there? Are you interested? And of course they all are, but it's amazing how many people don't actually, when they go into their adult life, they don't do a lot of the saving and investing that could actually make more money on top of the money that they already made. So it's always a good way to kind of introduce it. And I'm a fan of the stock market, and most of these individuals probably have been told horror stories of the stock market. So we can get into that maybe a little bit after if we have enough time. So we'll see. But let's start off with the first question. Let's start with some basics as they're trying to introduce this. What are stocks?
Yeah, so just very, simplistically looking at a stock, it's basically, it's an investment in a company that shows you have some type of ownership. So, it's people, like you and I, we can buy stocks, and essentially it's ownership, a percent of ownership in the company. And that's based off of their assets and their profits generated through day-to-day, business activities. They're often issued as a unit. So you could, buy 1 unit of stock, depending on what that company's valued at. It could be $10, $17, $100. But essentially, a stock is ownership in a company.
So if I am let's say that I'm a stockholder in Google, Facebook, let's use a tech company. And essentially, if they're doing well and they're making money, does that in turn mean basically me as a stockholder, I'm most likely making money off of their success?
Yeah, absolutely. So, if you always, you buy a stock at a certain dollar amount, again, we'll use $10, for example.
Mm-hmm.
A company is doing well, producing profits. Well, their stock price is valued off of their profits.
Okay.
So yes, if they're doing well, you bought your stock at $10, and it could jump up to $12, and that's when you determine, you technically don't get that money in your hand right away. You would have to sell that stock to actually realize that gain.
Okay, so it makes sense. All right. So obviously the idea, it's kind of like this fictitious world out there and people hear of the stock market. So how are stocks actually traded?
Yeah, I see you have the NASDAQ in your slideshow. That's one of the trading floors, one of the most popular trading floors, along with the New York Stock Exchange. Those are the two most common, but they are different in a way. Whereas the NASDAQ, there is no face-to-face. There is no trading floor. It's just all through telecommunication networks and the different dealers. There's people actually, trading stocks back and forth for people like us when we decide to buy it. But NASDAQ it's all through telecommunication and computers. Whereas the New York Stock Exchange, they actually have a trading floor, and everything is done face to face. This is also referred to as a listed exchange. You actually have brokers on the floor, working the floor, and if you or I purchase a stock, and I think we're going to get into this, I can get into it down after this, but how to actually purchase a stock, you go through a broker. And then these brokers submit your request to the trading floor, and that's where the trades are executed. And that's how you actually obtain the units of stock.
Is this so like in the movies? Maybe I know I've seen this, and maybe some of them have, depending on the movies they've seen, where like you'll see basically essentially somebody holding a piece of paper and they go up to somebody and there's like a group of people going up to this individual handing them paper. Is it still function that way? Are they trading that same way still now?
Yeah, I mean, they don't really use the papers. There's still that trading floor where people are, screaming and yelling, waving signs, but it's a little more electronically nowadays. But there are still people on the trading floor,
Okay,
executing the trades for the different brokerage firms.
Okay. All right, let's go to the next one here. So not all companies you can buy stock in, and that can be a little confusing, especially for somebody that, I want to invest in Chet and Matt's or Cameo, which obviously that can't happen. So how do companies actually become public or offer stock options?
Yeah, good question. So, like you said, you have the private companies, which is like a Chet and Matt's, where it's just privately held between 1, 2, 3, 4, 5 individuals. And then you have your public companies, which are actually traded on the different platforms, trading platforms, where anybody can purchase a piece of Microsoft or Cedar Point, Cedar Fair. And how it works, if a company wants to offer their shares to the public, they have to follow certain federal security guidelines, which governs the public trading sector. This is through the Securities Act of 1933. And, it just requires, if a company wants to go public, they have to disclose all their financials. This way, to ensure there's no fraud for a company, wanting to go public. And basically going public means you're offering a piece of your company, and that person is giving you cash or money for a piece of your stock. So essentially, there's certain requirements each company has to go through to become public. And then they register, once they're approved, their financials are audited, they're approved, they register through the SEC or the Securities Exchange Commission to get their approval. And once public, then they actually have to file at least an annual report, if not quarterly, to their investors. So you and I, as an investor, if we invest in Microsoft, you would receive their annual reports. And then also you can go to Yahoo Finance to look at different companies' balance sheet and their income statement.
So let's say I'm a young entrepreneur. I'll just give you a scenario. And my business is growing. I open up a ice cream shop locally. And then all of a sudden, before you know it, I've got like 25 different units of these ice cream shops. And I get to the point where I want to go public. If I go public, do I still own the company, or am I basically turning that over to the public?
So you could potentially still own the company. It depends how much of your company you decide to sell. So you could sell 49% of your company and retain 51% of your company. So you could still have ownership in that company. The structure of the company may change. Maybe there's a different board of directors managing the day-to-day operations. That would just be outlined when you decide to sell your company.
But do I actually own the company, or do I own 51% of the stock?
You would own 51% of outstanding shares.
Okay, all right.
So if you issue, you value your company and it's worth X, and you issue 100,000 shares, you would sell 49,000 shares.
Okay. All right.
You would retain the other 51%. And then what that means is when people start buying your 49,000 shares, that's going back into the company and back to you as the owner, because you essentially sold the company. So you're cashing out some of the company, and you can basically put that aside as your personal earnings.
Yeah, and so as we do well, I eventually sell my 51% or whatever as I turn 90 years old. That's when I would kind of really reap the benefits.
Right.
Okay.
Exactly.
All right.
Basically cash out, and if you wanted to sell it all, take that money and go retire somewhere.
Okay. All right. No, go next one here. Now, what's the point of this? I mean, we just kind of talked about how you could make money off other people's investment, but why do companies at the end of the day, why do they offer stock? Because they're essentially kind of giving up a little bit of ownership. So why would a company offer stock?
Yeah, so it's along the lines of what we just talked about. You may be nearing retirement. You want to hand over the reins to other different management. But one of the reasons would be to cash out, or basically when a company offers stock, you have many individuals buying that stock, which infuses cash into your company. So in that aspect, then rather than going out and taking on debt from banks, that's one way to grow, take on debt, or you sell stock, which then infuses cash into your company, and you may use that maybe to fund new projects, use it for working capital, research and development, invest in growth, or you can also use it to pay down debt, to strengthen your balance sheet. And so there are different reasons why a company would offer their stock, and those are some of the reasons.
And let's say, I mean, this is, I guess, like pessimistic. I don't know how you want to view this, but let's say that I own that 51%. This is my ice cream shop example still. And all of a sudden the ice cream shop starts doing terrible. I don't owe banks anything, right? It's just, unfortunately, those investors are going to lose a lot of money.
Yeah, right. You personally would not owe the banks anything at this point. Most public companies do not offer personal guarantees with banks.
Yeah.
So worst case is the stock goes to zero. The company files bankruptcy.
Yeah.
So yeah, whatever. If you owned that 51%, your shares were worth 100,000. You may just lose that value of your shares.
Okay. All right. All right. So last question here. If I had $1,000 it's kind of like more of an advice. I mean, I know there's a lot of options, but what are my options to invest in the stock market, and what advice would you give if I had that $1,000 and I wanted to kind of invest? Where would I start? How about that? Where would I even start?
Yeah, that's a really good question because it's even when I started getting into this, I didn't have a clue on what to do. I always kind of knew about the stock market, but how do I go about actually owning a stock or a piece of just I would recommend going to your local bank. That would be a good place to start. Local, they have brokers in house that will work with you. So you can talk with one of the cashiers there, and hey, I want to start investing in the stock market. Who can I talk to? And someone there can point you in the right direction. Outside of that, you could work with a financial planner. There's like Merrill Lynch, Edward Jones, UBS, those different type of physical brokers. And then you also have, once you get savvy enough and you start getting into it and you feel more comfortable, you could always go to the online brokerage route, and then you really manage your own portfolio from there. You can you do it all. You place the trade, when you buy, you sell. And those companies are like a TD Ameritrade, a Fidelity, a Schwab, a E-Trade. So that's kind of where, from start to finish, how it would look.
If I did, now, I think a lot of times for my students anyway, when they look at this, they think they see $1,000 and they'd be like, all right, what's the next big stock? I want to pump it all into one. Is that the best way to go? Like, do you want to pump that all into some company that you believe in, or do you kind of want to spread your investment out a little bit? How does that work?
Yeah, I would. To start, you always want to stay diversified. That's the key to investing. You don't always want to put your eggs in one basket.
Mm-hmm.
Want to try and buy, a few different stocks to start off with, or there's mutual funds which own a basket of stocks. And we can talk about that at a later date. But yeah, you always want to stay diversified. You never really want to just buy one stock. At least, with $1,000, maybe split that up and buy two stocks, because maybe one company, you buy Starbucks and that's doing really well, and maybe you buy Olive Garden, which has a chain of restaurants, and that doesn't do as good. So you want to try and even it out just to diversify your wealth.
Okay. Interesting. All right, I'm gonna put you on the spot here. All right, and I want to make a disclaimer to everybody listening. Whatever he says is not guaranteed. What's the next big stock out there, Mr. Spadaro?
Wow.
How about this? Let's do this. If I had $1,000 and I told you, hey, I have $1,000 right now, where would you tell me to invest it? Let's go there, because I don't want you to hurt anybody's portfolio. What would you tell me to do with it?
Yeah, so in today's environment, with everything that's going on, I would look at those stocks that heavily depend on like people going out and gathering, such as like a Cedar Fair.
Yeah.
Or maybe Darden restaurants, the restaurant industry.
Yeah.
Hit pretty hard. So in today's environment, that's what I'm looking at, and I think that's where you can get the best value. Now, long term, of course. Again, if you another thing to keep in mind is, if you only have $1,000, you probably should not be investing. When you invest, it should be money that you're not going to need within a 3-year period, I would say. So if it's 3 years or more, you have a little money to put aside, and you're not going to need it. You already have your little slush fund in case an emergency happens. But if you're looking long term, investing in those, like even an Uber. I'm sure all of your kids know Uber.
Yeah.
So that's kind of what I'm looking at right now. I'm taking that risk.
That's interesting you just said that, because they just had to do an assignment for me where we talked about like CDs and different things, and like when you should open a CD, and we talked about in there You want to invest in these things when you know you don't need to touch that money for a while. You've got to be willing and disciplined to put that money away and not be able to touch it to let it actually grow. And a lot of them, they came back with the questions of, well, what would be your best options? I said, well, the longer you keep something in there, that's how you're going to earn more money. You're not going to make, there is, sometimes it happens, but it's so rare. You're not going to get that overnight success with some of these investments. You've really got to be disciplined and be willing to wait it out. And like the market right now, I think is a perfect example of, people get scared. The kids see probably that the stock market is crashing and they think, oh my gosh, I would have to sell. Should people be selling now, or is this a perfect example, or when people should just wait this out and the stocks will probably eventually go back up?
Yeah, it's again, if you have a long-term mindset portfolio, there's no reason to sell right now.
Yeah.
Because as you look at the history, we've always been through economic downturns, and we always pop out of it when is an unknown, but we always seem to pop out of it and continue to grow.
Yeah.
So yeah, stock investing is long term. Even as much as I think I may know, I'm not a day trader. So I just look at it as long term. Okay, this is money I'm not going to need within the next 3 years. Let's go ahead and buy some stocks.
It's interesting because I used to do when we would always do this lesson, we used to play a stock market game, and they would ask me, and they had to make like 5 trades a day on this fictitious game on the Market Watch website. And they would ask me, what should I do? What should I do? And I would tell them, if I knew exactly what you should do every day, you guys wouldn't see me here. Just the fact that it is one of those long-term, and I don't know how those day traders do it and how some of them that are successful. It's pretty incredible. So what actually is, you said day trader, and that might confuse them. They're probably saying, I don't know what they're talking about. What is a day trader?
Sure, yeah, day trader, that's basically their job. That's what they do. They will buy stocks in the morning, and by mid-afternoon, they sell it. They just try and make a quick return on their investment. So they're just burning and churning stocks. They're buying, selling. Every day, and maybe they hold it for 2 or 3 days and sell a week. But they really, really monitor that stock. And if they can make a 5% return, that's what they're happy with, they sell it. So they just have to have that mindset if they're day trading that, okay, once it gets to X percent, I'm going to sell it no matter what. I'm not looking back. So that's essentially a day trader.
Yeah. Okay. Any last second financial advice for all these guys? A lot of them are getting out into adulthood. Some of them are going on to college. Some of them going in the workforce. Some of them military. Any last second kind of financial advice you would give to them overall? It doesn't have to be just stock market to these guys.
Yeah, I would say to start, once you start getting a job, or you get a job, start making a little money, always put some money aside. Open a savings account, and even if it's $5 a week, $10 a week, always put a little money aside just for, a rainy day fund. And put it in your head that you're not going to touch that money unless it's truly an emergency. But that's really key. Just save as much as you can. Don't always think because you have it, you have to spend it. So that's really my advice.
I tell them all the time. Some people choose to live paycheck to paycheck. Some people have to, and some people choose to live paycheck to paycheck. You don't have to buy everything you see. So, but I appreciate it. Okay. This was great. Hopefully they learned a little something. They would be thanking you right now and probably giving you a round of applause if you were in the classroom right now. So we appreciate it. And I'll let you get back to work because I know you're busy, and taking time out of your day is really, like I said, we appreciate that.
All right. Thank you, Mr. Nedgley, for having me.
Yep. Thank you.